Amazon just reported their earnings and the stock is down by about 4%. Currently, they are at $229. In full disclosure, I do own Amazon stock at about $89 stock price with a 166% gain, and it's the fifth best performer in one of my portfolios. About 3 years ago, I made a video on Amazon valuation for 2025, and I predicted $240 in that video, and today it's at $229, which is very close to $240, right? So it's fun to look back and see that the valuation has come true. Of course, it could just be a coincidence. I'm not bragging that I got it correct, but it's just fun to look back 3 years ago to see that valuation is coming true. So let's move on to the 2029 valuation in this video. Before that, I want to show you some numbers. In the most recent quarter, the revenue was a beat by about 0.3%, and the EPS beat was very good, 25% year over year. For the full year of 2024, Amazon increased their net sales by 11% year over year to $638 billion. And North America segment sales increased by 10% year over year to $387 billion. And international segment grew by 9% year over year to $143 billion. And AWS increased 19% year over year to $107 billion. Look at the operating income. North America operating income was about 25 billion. So that's on a $400 billion of revenue, right? That's about 6% operating margin. So if your operating margin is 6%, your net margin will be even less, right? Because you pay tax on it. I'm not considering any interest income there. International segment, their operating income is 3.8 billion. So there is a slight operating income there, I think about 2%. Usually they post loss there, but it looks like for the 2024 they finally got into profitability, but it's very, very less. And AWS segment operating income was $39 billion off of $107 billion of revenue, right? So that's almost like 37% operating margins, which would give me about 35 or 34% net profit margin. Net income for entire year of 2024 is $59.2 billion. Let's look at their guidance for first quarter of 2025. They're saying the net sales are expected to be $151 billion to $155 billion. That's growth rate between 5% and 9% compared to Q1 of 2024. And the operating income, they are guiding between $14 to $18 billion. So let's look at the reasons for the stock decline. It reduced by a little bit, but let's look at the stock decline reasons. First one is weaker than expected first quarter guidance. Analysts were expecting 158 billion, but they guided for the max of $155.5 billion. And slight miss on cloud revenue. Even Microsoft had this, right? So Street was anticipating 28.9 billion, and Amazon Web Services reported 28.8 billion. That's a slight miss. And there's also elevated capital expenditure. This is an issue with all the mega cap companies. Amazon is saying they can spend about $100 billion in this. So that also caused the stock to decline. So now let's look at the valuation. I'm going to show two cases. Before I show the valuation, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm just recording my thoughts about Amazon. Please don't buy the stock based on what I'm showing now. Please use this as a reference, and please do your own due diligence. If it drops, please don't come to me. This is my valuation and my assumptions could be completely wrong, right? So let me show you the reasonable assumptions case first. As I have explained in my previous video, I do the valuation for e-commerce separately and AWS separately. So let me show you the AWS valuation. In 2024, they made $107 billion of revenue. They grew their revenue by 19% year over year, right? But I'm estimating 22.5 for the next 5 years because there's a lot of demand for AI, and Amazon is not able to meet that demand. That's why they're spending about $100 billion in infrastructure. So the cloud spending is going to go up for the companies, and that's going to benefit AWS. I think they can get to $300 billion of revenue by 2029 with AWS. If you think this is too optimistic, you can put your own number there, but I think $300 billion is reasonable. And I'm estimating net profit margin of 25%. With that, they can make close to $74 billion of net income in 2029. And I'm estimating a multiple of 40, because if a company is growing in 20% plus and has 25% net profit margins, they can get a higher multiple because AWS has incredible moat as well, right? So that's why I'm putting 40 multiple. If you think that's too conservative, put your own number. So with that, the market cap for 2029 for AWS would be about $3 trillion. I'm estimating no buybacks because Amazon is spending a lot of money in the infrastructure spending, right? So that's why I'm estimating no buybacks, 10.52 billion outstanding shares. So in 2029, that would convert to $282 just for AWS. For e-commerce, I'm estimating growth rate of 10%, with which they'll make close to $850 billion by 2029. Currently, the operating profit is about 6% for North America, 2% for international. But I put 10% here because I explained the reason in my previous video. Amazon ads gives me hope that they can get to low double digits like 10%. So Amazon ads is growing rapidly. They are very, very profitable, and that's part of the e-commerce. Otherwise, Amazon will not make too much money in shipping you goods, right? They make a lot of money on Amazon ads. They also make money on Prime. They can increase the prices on Prime, and there's also ads in Prime, right? So that's also going to help the margin. So that's why I put 10% net profit margin also in this. That gives me $85 billion of net income. I'm only assigning a multiple of 20. You may pay 30 for this, but if a company is growing in like 10% and has net profit margin of 10%, I will not pay more than 20. So that's why the market cap for e-commerce business will be 1.7 trillion in 2029, and that converts to $162. So when I add $282 for AWS and $162 for e-commerce, I get a stock price of $445 together. Currently they're at 229, so that's about 94% gain in 5 years. That's almost double, right? So that's very attractive to me. Now let me show you the great execution case. I hiked up some of the numbers and hiked up the multiples, and the great execution is giving me $615 by 2029. Current stock price is 229, so that's about 169% gain in 5 years, and that's an incredible gain. But for my personal journey, I look at the reasonable assumptions case, in which I am estimating $445 by 2029, and that's a good enough reward to me. So I will consider adding to my position. My cost basis is $89, so it's painful to average up. But what I'll do is, I know the upside is $445, so I'll see if there will be a moment when Amazon drops below 200, and that's when I'm going to add. So let me know your thoughts in the comments. Thank you so much for watching.